Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 6th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. A little bit of economic data today. We got German factory orders came in at better than expected at increase of 1%, was expected to be only an increase of 0.3%. So a nice move to the upside there. We also had a 30-year auction in Germany, came in pretty much in line with expectations. Then we here in the United States, we had Challenger job cuts was a negative 24.7%, which that is a negative, so that it's a negative to a negative, if you will. So that's actually a good thing. Job cuts were less than expected. Well, also on the flip side of that, saw unemployment claims pull back a little bit to 249,000, was expected to be 255,000. So both of those two data points really jiving there because unemployment claims are less, job cuts are less. That is reflective of one another. So actually the overall economy in the regard of job cuts looks pretty decent there. We also got building permits in Canada going through the roof at 10.4%, was expected to be 1.1%. One thing I always talk about with building permits is you can pull as many permits as you want. You don't have to start building. So that is really a precursor to just kind of keep an eye out for that. I usually don't talk a whole lot about Canada, but that was a pretty glaring number that needed to really kind of be gone over a little bit more. And then natural gas storages here in the United States came in at 80 billion cubic feet build, was expected 67 billion cubic feet build, so a lot bigger build than what was expected there. On to the overall markets, we got crude oil. The bulls in crude oil really rejoicing today, up another 50 cents, and the key thing is it is above the $50 a barrel mark, which is more of a psychological level, but it does coincide with the value area high. So the shorts could look to start panicking here. If we settle above this whole $50.31 or $51, and let's call it 30-ish cents, the bulls are going to go to test this $51.67. If we settle back below that $50 a barrel area, it's going to look like the bull or bears really defended that level, and we could easily see it want to trickle back down and go back down to 45.86ish, where the point of control is. So keep that line in the sand on your sticky note, if you will, because anything above $50.30, the bulls are winning. It's going to look to want to test the highs. If we see a bit of a pullback back below $50 a barrel, it means that psychological $50 level just is not sustainable, and we could easily see a pullback to $45.86. So keep that in mind going forward. On to gold. Overall markets right now in the equities pushing higher, just going into positive territory in the last 15 minutes or so, which is really hurting gold futures right now, down $12. And as you can see yesterday, that looked like this 200-day moving average was going to act as support. It held true for the last couple of days. Today, just giving up and moving lower, which is not a good sign for gold bugs for that matter. On to the bonds. Bonds sitting here right with the point of control earlier on, before these equities really started blasting off in the last 15 minutes to a half an hour. Bonds were sitting there right there at that point of control, but are starting to give up a little bit here as the overall equities start pushing higher, down a half a point or 15 ticks in the bonds. Here's a chart of the Dow Jones Industrial Average, really one of the only indices right now that is in negative territory for the equities, down 21 points, sitting right on the 50-day moving average, which is really acting as support. Here is the NASDAQ. I just spoke and said the NASDAQ was pushing into positive territory, and it has given up a little bit. There we go. Seeing a lot of volatility here right around the unchanged area. We just went from down a half a point on the day to up 1.25 ticks. So we're seeing a lot of movement going back and forth right now with the equities in general. This is the E-mini S&P pushing just higher into positive territory, up 1.25. Right when I got ready to say that, it was only up a half a tick. So we're seeing some major movements going on just in a matter of seconds, where it's just popping back and forth. This is what I was talking about. We were in negative territory really when I was getting ready to go on here and preparing for this for the most part. And as you can see, we blasted off, basically rallying about 6 full points in the E-mini S&P, so a lot of movement back and forth. The NASDAQ might give show a little bit more of a dramatic move, if you will. If I can pull that up real quick, /NQ NASDAQ, as you can see in the last half an hour for the most part, almost an unabated rally into positive territory. All right, on to a trade that I've done. I went into Smith & Wesson, which is ticker symbol SWHC. Just has a big down move today, but right there on the 200-day moving average. Decided to add a little bit of long here. It's had a big sell-off for the most part. It's kind of right there on the support of like a downward trend line, if you will. So I'm just looking for a quick hit on a positive move in here. So I decided to go into the November and sell the 24 puts for 90 cents. So I'm looking for that to hold there and hopefully get a little bit of rebound. Probably not going to hold on to that for a real long time. The reason why I decided to also do this is there's no earnings in the next expiration cycle of November. So that's going to be the thing, is we're moving right into that whole earnings season. So earnings are going to be top of mind. It's a little bit more difficult to put trades on around in or before, a couple weeks before these earnings trades start coming out, because I don't really want to see volatility expand on me when I'm getting short premiums. So keep that in mind. I've done a webinar on great trades for earnings season, so go to protraderstrategies.com, check that out. Also, this Friday we are going to be doing a webinar on the poor man's covered put. So a lot of people get long stocks in their portfolios. It's the American thing to do, but at the end of the day, you got to be careful that if you're completely long the stocks and you don't have any short positions in there, you're not really hedged appropriately. So there's ways to add some short deltas in that. So if we get a bit of pullback, it's not going to hurt your overall portfolio nearly as bad. So that is going to be a good one. It's also an easier way to short an underlying, rather than going out there and borrowing stock and having to pay dividends. This is going to be a great way that you can implement this strategy and participate on a bearish move in the underlying, and we'll be able to cap our risk to the upside. Whereas I did the webinar on synthetic shorts, that one was unlimited risk to the upside. This one is a way to put an embedded synthetic put into our synthetic short. All right, so check that out. Go to protraderstrategies.com, sign up for that. That's all I got for you guys today. And if you can't take that, take it easy.